morning, guys. Good morning. Advance. Happy holiday. Happy holiday to everybody. I know there's going to be very light trading. There's going to be very little activity as far as it all goes. But if you are going to be involved, just be aware that the bulls are not in power. It's simply that there is zero selling taking place. Futures right now are just going green, a little bit higher over on the ES, up 5 points. We're up about 29 points over on the NASDAQ. Pretty flat over on the Russell and relatively flat over on the Dow Jones, as the last 2 days, Monday and Friday, have all been NASDAQ. All NASDAQ, all QQQ. And we are very well extended, well above all of our moving averages. Our 5-day, our 10-day, our 20-day, our 50-day. We're well extended up above all of them. So we're floating. We're floating in the middle of the air. And if you are going to go ahead and get involved in something, just lighten your load, because you are coming into the end of the end. I've shared for you yesterday. Let me pull it up. Yesterday, like I said, the risk starts at 68.60. That was prior to the NVIDIA pumping their chips right at 7:30 in the morning. And again, then I was saying, if you're looking at the 6905, 6900s, you're better off waiting for QQQ to get up there to that 623.70, because there was only 50 cents credit that you were able to get on them at the moment. Right there at the open, the 68.65, 68.60s, $3. Never really too much of a move, because our lows was 68.55, and we just grinded along that November calendar, or that November candle at 68.82, 68.78 all afternoon, all day yesterday. So again, sharing the charts as best as I can. Your 68.80 calls, 68.75s if you wanted to risk into the close. Those were 2.5. They didn't work. Obviously, you lost $1 on that trade. But then if you wanted them for tomorrow, being today, they were at $3. Well, they're still at $3. Your 68.80, 68.75s, still trading at $3 right now, a little bit better than $3. So be aware that a lot of this is going to change, because at 8:30, you've got GDP, PCE, industrial goods, manufacturing, consumer confidence, and then later in the afternoon, you get your T-bill auctions. Don't have anything scheduled as far as speakers. Don't have anything scheduled as far as Trump goes, but as you know, those things can change on a dime. So yeah, again, I'm not happy with the conversion that took place there on Friday. How we have converted from being red on the month during that quad OPEX week to now going into the green on the month. I don't like that. And what I mean by I don't like it is, I don't like it from a Christmas bulls warning bearish point of view, that we're going to get a massive sell-off here over the next 2 days. Yesterday, a little bit of a signal, because we didn't even get a 30-point range, 26-point range, and you've got 3 green closes in a row, which is not in any way, shape, or form illegal. You can get 4, you can get 5, you can get 7. It's just, it's something you gotta keep in mind when you are thinking about playing bullish put credits, because one of your big warnings right now. First off, let me start off with the SPX. I'll get to the warning in a minute. 5.85% bounce right up there to that 69.03. Didn't really love it, but okay, yeah, sure, we got to 69.03. Beautiful move to the downside. Everything worked out as planned. 50 retracement of the bounce. And here we are floating into this rejection area, this 68.76.79, the 123.6 extension of this bounce, and hovering right there at that November candle at 68.82.32. So we're above the box, the 68.40, 68.25, 68.13. Our moving averages are well below where we're trading because of the gap up yesterday. So again, it's one of those things that you're going to have to keep in mind when you are thinking about playing a bullish put credit, because first and foremost, you're up in a pretty, respectable rejection area. When you come over to SPY and you chart SPY and you look at SPY from a different angle, very similar to the ES, we're floating up to that 68.85.87, 686. So roughly we're talking about half a point higher than where we're currently at over here on the SPY. Half a point higher than where we are. So with that half point possible to the upside, be extremely careful about doing these bullish put credit spreads. You've got your SPX, like we talked about yesterday. It started reaching up into overbought, and as you can see here, you do have a pretty decent embedded sell divergence on your 4 hour, right? We're looking at a 4 hour. This is not a day trading, scalping, 1 minute candle kind of view. This is a 4 hour, bigger, broader, wider, medium term view, looking at it from a 2, 3, 5 day perspective. Come over here to your 1 hour, and like I was sharing yesterday, is you're overbought. Well, you were overbought, and then you started to cool down because you went nowhere, and now you have yourself a tiny little possible setup for a sell divergence as you are already up there into your overbought zone. But like you see over here, when we were trolling all through Thanksgiving up to that 69.03, this isn't an actionable kind of trade, because the longer you go sideways, the easier it is for you to start getting oversold. So again, it's just something that you want to be aware of. But more importantly, for you guys thinking about any kind of credit spreads, bullish put credit spreads, bearish call credit spreads, you got a 14 VIX. There is not a lot you're going to be able to do with the 14 VIX playing credit spreads unless you're going to get right up there on the front line, right next to where all the action is, and take those bigger risks. That's the reason why I emailed you out and I posted at the end of the day yesterday, while 11 people were asleep in the house that I'm at, the trade I took on SPY for March, because it's a big advantage down here getting a cheap price. So over on your QQQ, you got a tiny little gap up today. You're almost there to that 620. 1, 2, 3, 4 gaps that we've created since that low last week. Be very careful. And over here on your IWM, you really don't have anything going on. You got your 2 gaps that need to be filled. Is what it is. We should never have brought the dogs with us, but we did bring the dogs with us, and they do not like the fireworks that are up here every night. So I'm going to let you go. I'll get the email out to you. Happy holidays, everybody. Enjoy yourselves. Have a beautiful couple of days. And for those of you who do have family that are extended, look, man, even if you have issues with them, call them. Give them a call. It's time to, get rid of that homesick that you got going on, because we can never go back to where we were as kids. But we can try and put Band-Aids on it.